topic. And you're a bit fast. No offense. You're a bit fast. And I don't understand. Please, can you take it from this top again? Sorry. Can you start from the beginning? Sorry to drag you back, but I don't understand.
All right. Please, others, what is your question so that I can group everything together? Others?
Hold on, sir. So when you're trying to differentiate between IRS 36 and IFRS 5, that is impairment and health for sales, they're saying that carrying amount for impairment will be lower than LRV, and for IFRS 5, LRV will be higher than carrying amount. Is that correct, sir?
No. I said please get me right. That's why I use the word, please don't quote me wrong for a particular standard. I said for IRS 36, which is impairment, that your carrying amount will be higher. Are you getting it, man, now? Are you getting me?
Yes,
who is
sir.
the person who has the second question? Okay. So the carrying amount will be higher for impairment. Are you getting me now? Because the asset you want to dispose of doesn't have what is the value is lower than its carrying amount. That's why you have impairment. But IFRS 5 is telling you that okay, NRV will be higher. Are you getting me? Simply because that what you are disposing of, you want to know whether so please, can you hear me?
Yes, sir.
Yes, we can hear you. Sir, please.
Okay, so what I'm saying is that, so what I'm trying to say is that the asset that you are discontinued, that you no longer want to use, that means that the sales proceed will be higher. Will be what? Higher in your what? In your FS. So that is what IFRS 5 is trying to tell you. And that is what I'm trying to explain. My sister, do you get it now?
Yes, I do, sir. Thank you, sir.
Okay. So the first person that says that she doesn't understand. Okay. Because today is our first class, and you all have the right to ask questions, and the reason for you to be in class is for you to understand. Okay, permit me. For others, I make a statement that while saying something else, to you to be as if that you are being dragged back, and that is not the case. Okay. So the sister who said that she doesn't understand, please, are you there now?
Yes, I'm here. I'm listening.
Okay. Now, I'm saying that what IFRS 5 is telling you is that you are using a particular. Are you getting me? You have, for example, now, let me use a board. Maybe that one will be easier for you and some others. Okay. What's the name, my sister? What's the name? Name.
Chamaka.
The card group of company.
Chiamaka.
Don't worry. What really matters is for you to understand. I'm sorry for Chiamaka. Chiamaka. Okay. Okay. In your company, you have plant and machinery. You have motor car. You have equipment. Abi, you have
furniture and fittings.
Premises.
Building.
Thank you, sir. And fittings. We have building. let's stop like that. Land and building. Okay. Now, what IFRS 5 is not telling you is that you know that you are using all these non-current assets for your business, right? Chiamaka and my other
Yes, sir.
people. Yeah, okay. So now you have the intention that you no longer want to use one, that you want to dispose it off, that this asset doesn't meet up your standard. So you want to eliminate this F and F. Are you getting me now? This F and F, you are eliminating it.
Yes.
And you know that this is your SOFP. Likewise, is our financial statement. You know, it's just a board, it's not a solution. Permit me, I'm just writing like for you to understand. So now, you said that you no longer put it off. Or basically, you've gotten a new one, you want to dispose the existing one that you have with you. So what will you do? So IFRS 5 is now telling you that, okay, in as much that you no longer want to use this, that means you will discontinue it. Discontinue from used. It's the same thing as discontinue from operation. Which asset are you no longer using, my sister? And for those who are following me, which asset is she no longer using anymore?
Furniture and fitting. Furniture and fitting.
Thank you. Okay. So that means that in our book of accounts, that means this one will continue to exist, right? This one will exist, right? Yes or no?
Yes, sir. Yes.
Yes, sir.
This one will continue to exist, yes or no?
Yes.
Yes.
Premises inko?
Yes.
Yes.
Furniture and fitting inko?
Yes,
No.
sir. No.
No.
Will it continue to exist?
No.
No, sir.
Thank you. Land and building.
Yes.
Yes.
Yes, sir.
Now, what the IFRS 5 is now telling us is that in as much the F and F is no longer part of what we are going to be using, then that means that you will separate it. Because it is not part of what you are going to be using for your business anymore. So you discontinue using it. That is the meaning of discontinue from operation. That means it is no longer relevant for the sake of the business. Are you getting me? It is no longer relevant for the sake of the business. So now, let me now come back to the notes. Chiamaka and others, I hope you are not getting it now because it's not
Yes,
only
I understand.
she that doesn't understand. Other two, I know that they are just silent. They don't get it. I think everybody is being carried along now, right?
Yes.
Yes, sir.
Thank you very much. So now we now have disposal of group. You know, we've used from this particular slide now, we've understand that non-current assets that is being held for sale and discontinued operation too, we've analyzed that. So let us now look into disposal of group as well. Okay, disposal of group. You know that, let's say for example, as you know before, or those who doesn't know group, it's not everybody that understand group. People just do abracadabra. Let me just go and do it because you know group is complex, and you all believe me that it is complex. As you are finishing one rule, another rule is coming in. So now, but this one, I want to believe that 97% of us will understand it. We have the PC. Let's say, for example, we have, let me use Chiamaka again. Chiamaka PLC. Somebody should give me his or her name. Let us use it.
Solomon.
Johnson. Solomon. Okay, sir. Solomon PLC. Johnson PLC. And who again? Who else want to give us their name? Somebody else?
Yetunde.
Okay. So equation balance, 2 women, 2 men. Yetunde PLC. Okay, if Chiamaka have what? 70% in Solomon, 65% in Johnson, and 88% in Yetunde PLC. Accountant, Chiamaka is who to all these 3 people?
Parent company.
Parents.
Fantastic. Who is Solomon to Chiamaka?
Subsidiary.
Subsidiary.
Who is Johnson to Chiamaka?
Subsidiary.
Who is Yetunde to Chiamaka?
Subsidiary.
Okay. Now, I know for the skills that you are coming from, you've not done fellow subsidiary because it's not part of your syllabus. But the 3 of them, they call themselves fellow subsidiaries. Because Chiamaka is the company that is controlling the entire 3. So they are fellow subsidiaries. Mind you, for example, now, we have FMN, Flour Mill of Nigeria. They have a lot of a lot of subsidiaries. One of them, they have Rum Oil. They have Premier Field. They have
Northern Nigerian Flour Mill.
Yeah. So they have Eagle Flour Mill, a lot of them like that. But what we are trying to say is that in as much, you can imagine, accountant, Chiamaka now make decision that, okay, Yetunde will no longer be part of my word segment anymore. I want to dispose it off. I'm disposing Yetunde PLC off. That means that if Chiamaka want to now rewrite a new account, please, will Yetunde be part of it, accountant?
No.
Yes or no?
No.
Depend on the time.
Okay. Depend on the time. Okay. We still come back to that. But in as much that we are explaining that, okay, you no longer, are we recognizing you today in our book of accounts or not? We are no longer recognizing that, right? Yes. Johnson, will Johnson still be part of the accounts we are preparing or not?
Yes.
Do you agree?
Johnson will still be part. Yes.
Okay. What of Solomon?
Yes.
Will Solomon be part?
Yes.
Okay. That means that which subsidiary are we disposing of now, accountant?
Yetunde.
Thank you. Fantastic. Chiamaka, I hope you are getting it now.
Yes, I understand.
Okay. So the next one is now telling us that, okay, the general rule on the recognition of asset. In as much that asset is no longer being recognized in your book of account, what are you going to do? When an asset is derecognized, its carrying amount is removed from the statement of financial position. In line with IS 16, an item of PPE is derecognized in the following circumstances. How? On disposal of the assets, like we just analyzed earlier. When no future economic benefits are expected to arise from its use or from disposal, that means that that asset, in as much you've made up your mind that you no longer want to use that asset, you want to dispose it of, accountant, what will you do? So that record no longer recognize any economic benefit that is flowing from that asset. The third one says, if a non-current asset is disposed of, the gain on loss on disposal, believe me that you can either make, the rules of business is that either you make profit or loss. That is why we always have in our P&L account, which is your profit or loss account, that you can always have either profit or you will have loss. Are you getting me? you will have profit or loss. That is why we always have it like that in all the information of financial statement. So let's continue. Should be included in the P&L in the period in which the disposal occur. That means that either the gain or loss will be what will be shown whenever the disposal occurred. That means the period when the disposal occurred. Non-current assets are held for sales. That means that your item of PPE. I get him now. That means that you will no longer what subject that same asset. Like my other sister asked that, why is it that what I explained earlier that she's not getting it? You can see now that they are telling you that that same asset that you are recognizing or it has already suffered a particular impairment, you will no longer categorize any impairment to it. That means that asset will stand on its own. Me, I myself, you and yourself. So it will be on it or on his or her own. Let me as a human being. But if it's a particular what asset, it will be on its own. Well, because even though you register a particular business with your name, that name we call them artificial human being. What the government recognize is Yetunde PLC, not Yetunde human being. I hope you are getting an accountant. You know that in this class, we have Yetunde in this class. We have Chiamaka in this class. We have Johnson in this class. We have Solomon in this class. Likewise, if we should open a particular business with that name, accountant, I hope you are following me. Please let me know. Hello, can you hear me?
Yes, sir.
Yes, sir.
Yes, I
Yes,
can.
sir.
We can hear you.
All right.
Yes, sir.
So, in as much they are what? They are open with their name. That means government will recognize Yetunde PLC, Johnson PLC, Solomon PLC, Chiamaka PLC. They do not recognize you, the human being. Recognize the what? The existing company. Because government want to tax the existing company, not the human being that is operating it. So that is why they say that, okay, that particular asset, in as much it has suffered a particular impairment, you no longer, anything that asset is suffering, no, if that asset is having a headache before, and you are giving that asset Fensic or paracetamol every time, you no longer buy paracetamol for it anymore because you are disposing of that asset. Likewise, presented on a separate category on the face of SOFP. That means that you will no longer recognize it with the other account. Like we've said earlier on here that in this account, we said here that the statement they mean here is that separately it means you will group your P&M, your motor car, equipment, premises, land and building, they will be together. While furniture and fitting will be under it. Maybe for example, accountant, we have F&F. Let's say for example, we have 10,000, we have 5, we have 5, we have 15. This one too, we have 10, and land and building, we have 20. Accountant, please add everything together, please. Who has the calculator there? Add everything plus this 10. What do we have? Somebody should give me that figure.
15,
75.
75. Okay. You know, because I'm operating that particular asset, I total in my book of account is 75. So what the statement there means is now is this, that if you are no longer using that asset, what you will do, you will now say P and M 10, motor car 5, equipment 5, premises 15. Abi, then you have land and building 20. Please, accountant, that will be 65, Abi. 65. Are you following me, please? Chiamaka and others.
Yes, sir.
Okay. So that means now that the new preparation of your
No, sir.
yes, ma'am.
Take care.
Yes, ma'am. Hey, who is that?
Man. Yes, sir.
So here we now have that, okay, all the existing accounts still remain the same. That means you now come under a F and F 10. That is the meaning. You will categorize it separately in the phase of your account. So you will not group it together. That is the meaning of that statement. So are no longer depreciated. And that asset that has been depreciated before, no depreciation will be allocated to it anymore, because the asset will be write-off in your book of account. That means in your financial statement. And I said, criteria for classification, we have the word acronym MAS. And I said that you should take note of any information, any standard that has to do with any criteria. Once there is criteria, ICAN are very, very smart. I said it the other time, and I'm repeating it as well. Take note of ICAN. They are very, very smart, and they are very, very wise. They know that students don't like reading like that. But you must know that if there is a particular standard that has criteria, please make sure you understand those criteria. One of the criteria for this IFRS 5, we use the word acronym MAS. And I said it earlier on that the word MAS, it is not the standard that is telling you that you should use MAS. But we use an acronym, I get me, to make it easier for students, for easy assimilation. One is there must be management. I get me. Or let's use the word management must be committed to a plan to sell the non-current asset or disposal group. Chiamaka, are you there? You must have the intention. You must have made your decision. I get me now. Chichi, are you there? Can you hear me?
Yes, sir.
You will have make your decision that me, my firm, Chiamaka PLC, we no longer use Yesterday PLC company anymore. You want to dispose it of. You will have make up your decision. No, it's not that if you are contemplating, I can't. I hope you are following me. If you are contemplating that you want to sell, you don't want to sell, it does not meet the criteria. I hope you are following me. It doesn't meet the criteria, but you will have commit. You know the word committed means that you make your decision that this is my final stand. Because if your examiner too want to test your knowledge, they will lie. They will lie in the question that they will be what? Deviating front and back that I want to sell it. I'm planning that I don't want to sell it anymore. That means that there is no commitment. Mashallah. Maybe there is no commitment. Are you getting me now? So that means that you will no longer what? You no longer recognize it if they are not committed to that particular word, to that particular disposal. Now, they said there must be active plan to locate a buyer. That means, Chichi, you must have an active plan that you said you want to dispose something of. You must look for a buyer now. You must know somebody who else wants to buy. There must be active buyer, somebody who wants to buy it. Are you getting me now? I hope others, I hope you are getting the analysis now, so that we will not come back again on this. Okay. So active buyer must be on ground, that you have somebody who wants to buy that asset. Not that you only categorize the asset that you no longer want to use it and there is nobody to buy it. So it does not meet the criteria. The third one says that the asset must be available. So the word A there, the M stands for the management. The first A stands for the active plan, but you must use English to qualify it. So the other A, asset must be available. Then the other one, then the S means sales. The last S means sales must be highly probable, but you just have to make it a statement and understandable. Now, we now have that, okay, the asset must be available for immediate sales in its present condition. You have committed that you want to sell the particular asset. You now have the buyer who wants to buy the asset. The next one is that the asset you are telling us that you want to sell, where is it? You are not telling the buyer that they will bring it tomorrow. I get him. They will bring it tomorrow. That means the criteria is not met yet. So the asset will be on ground. The active buyer, you will know the active buyer. You will have been committed that you want to sell off that particular asset. And next is that sales of asset is expected to take place within 1 year from the date of classification. That means that, and I'll come back. Let me now come back to my analysis here now. And I use the period that, okay, accounting date is always 12 months, right? Chichi, accounting date is always 12 months, right? Okay.
Yes,
we now use the beginning of the period, which is 1/6/2024. And I ask that when will the accounting period end? Many of our colleagues in this classroom tells us that it will end May. Do you agree to that as well?
yes.
Okay. So that means that is one accounting year. Okay. I now further explain that if you have or you are starting, you classify that you want to sell off that asset. You need 1/7/2024. Does it fall within the accounting date or not?
It does.
Thank you very much. We are now saying that, okay, that means that in as much you've already decided, that means that you will what? Recognize it as well. So that is what the statement is telling us. I get me now. And the sales must be highly probable. Yes. So, and the sales must be highly probable. So those are the criteria. So I now come here. So to further explain that, okay, like I've said earlier on, one of my sisters has asked a question like this. Also, I want to repeat it, but I want to summarize it. In as much that impairment, and we said that impairment on its own means that if a particular asset suffer impairment, it means that the carrying amount. Accountant, I want to believe that you all know what carrying amount is. Do you? So that is the major thing.
Yes.
Are you there? Do you know what carrying amount means?
Yes, sir.
Yes, sir.
Thank you. That's fantastic. So that means that the carrying amount for impairment now is that the impairment will be what? Will be higher than the what? The recoverable amount. Recoverable amount means that if you want to sell that asset, how much will we realize from it? That means which means your book of account is higher than the amount you are deciding that you want to sell off a particular asset. For example, now, maybe you bought an asset 12,000 naira, and the value of that asset now is 10,000 naira. I get me now. Accountant, if you the book value of that account of that particular asset now, if you now want to measure it based on how much you bought it and the division and the new carrying amount. Is somebody calling me? You said? Okay. So please, let's continue, accountant. So that means that that particular asset, which is 10,000, which is the new book value, and if that asset, it will have been put into use for several periods. So that is why you have the value of 10,000. If you now want to sell it now, you are now selling it like around 10,000. You are selling around that 8,000 naira. Accountant, do you make gain or you make loss?
Loss.
Loss.
Thank you. So that's what they are trying to test regarding what? Impairment. You understand? So for the IFRS 5, so the IFRS 5 is telling you the asset is trying to tell you that your NRV is different from impairment, because that asset, you no longer want to continue to use it anymore. So they're now saying that non-current asset or disposal group held for sale should be measured at the lower of its carrying amount and fair value less cost to sell. That means that it cannot give you either gain or loss. That's why I make the mistake, make a statement that you can either have a gain or what? Asset. So don't mix up the rule of IS 36 and IFRS 5. And also, the presentation in line with IFRS 5, it says that assets held for sales are presented separately on the SOFP, and the result of discontinued operation are presented separately in P or L. Do you understand now? So, and I said that for your disclosure requirement, what do you need? I said that you don't need to be cramming anything disclosure. Once you know what a particular standard is about, then you are good to put down the disclosure requirements. So rather than coming for IFRS 5, IFRS 8, IAS 36, IAS 16, IAS 2, IFRS 2, how many disclosure do you want to put inside your brain? So I'm not saying that know what that standard is talking about, know the analysis of that standard, then with those analyses, then you will know how to group it under your disclosure requirement. Chichi and others, do you have a better understanding now?
Yes, sir.
Okay. Others? Accountant in the house, are you there?
Somebody's hand is up. Praise.
Yes, please. Yes, sir.
Okay, please go ahead. You know I've minimized. That's why I can't see. Ask your question, please. Go ahead.
Good afternoon.
Okay, praise. Good afternoon.
Yes, sir. Sorry, I just want to get clarification. Sorry, I'm using two devices, but I can't speak through my laptop. Okay, so I want to get a clarification based on the impairments that you mentioned. When measuring impairments, right, we have two things that we need to look out for, comparing it with the carrying value, right? We have value in use and fair value less cost of sales. So now I want to understand, in measuring IFRS 5,
okay,
what is it that we are not meant to compare the value in use? Like, we don't have anything to do with the value in use. All we need to compare the carrying amount is the fair value less cost of sale. So that's what I want to understand, sir.
That is it. What you need to confirm is that I only need the net realizable value because you want to dispose of that asset. I mean, isn't it, Praise? You said you want to sell a particular asset. Will you continue to use it anymore? No.
No.
If that asset is subjected to test for impairment, will it continue to suffer impairment?
This laptop, okay.
Are you there, Praise? Will you continue to impairment? No. So now what you will compare is that you will compare the kind amount and the NRV, which is fair value less cost to sell, not the value in use.
Okay, sir. I get it.
Yeah, thank you.
Thank you very much.
So who else again? Praise. The other Praise. Somebody else is raising up her hand. We still have another Praise in the house.
So, sir, it's me.
Please,
I'm
quick one,
using
quick
two
one.
devices.
Okay. Who else before we solve the question? Okay. I want to minimize this. So, I will not see if anybody is still asking question now. So, when I want to solve a question now.
I want to solve, my notes cannot open. Well done. WhatsApp cannot open. Well done.
What happened to your WhatsApp? Sorry, if anything can't open. Okay, so accountant, we have this question. We doesn't have much on this IFRS 5, but basically, the only question I just brought for you guys is that let us solve it together and see what we are going to arrive at. So whosoever have a question, we'll deal with it before we move to the next topic for the day. We have Badalona PLC provides you with the statement of profit or loss of group for the period ended 31st December 2023. They give you the revenue, cost of sales, gross profit, distribution cost, admin cost, finance cost, investment income, PBT, income tax expense, profit for the period. Additional information. I have, due to economic crisis in Nigeria, Badalona has a branch located in Kano on 1/10/2023. I get me now. That statement, something is missing. That means it has the intention of disposing it off. So disposal has to be there. But just understand the concept of the question. That is what I'm after. The operation results of the Kano branch for the period of 31st March 2023 are as follows. They gave you revenue, cost of sales, distribution cost, admin cost, finance cost. Applicable tax rate is 35%. Required, we draft the statement of profit or loss in accordance with IFRS 5. In accordance with what? IFRS 5. So we now want to deal with it. And mind you, I want to follow the rules, accountant, and you too, you will understand it in a clear concept. So let's see. I think I can clean this board, right? Hello?
Yes.
Yes,
sir.
sir.
You can blame me.
I'm sorry, sir. I'm finding it difficult to see if it's my network.
It should be your others. Can you see? Others can see now.
I can see your screen.
Your
You
network.
can see.
So I hope it has come off from your end now. My brother?
No, sir. No, sir. It's terrible.
You can't see my screen.
I can see it now. I can see it now.
Okay.
I can see it now.
Maybe it's because of the eraser. I'm cleaning it. That is why. Maybe that's why you believe that you can't see. Okay. So, what is the name of the company? Let's see. We have Badalona PLC, right? So, and the information they gave to us is on profit or loss. If they give you information on SOFP as well, all you just need to do is just rewrite off that information like we did for the previous rough sketch that we did together. You just remove it, then you are good to go. So let's see what we want to do here. You will see that we are going to all understand this particular standard. So we said that the name of that organization is Badalona. So this Badalona, so what do we now want to do? They tell us that the requirement, first and foremost, accountant, is that another thing I need to chip in is make sure whenever you see your exam question, go and look at the requirement. Prepare that requirement on ground. Then if you now have any workings you want to do, you can be doing your workings. So if you do workings for like 4 pages, it will only fetch you, if the mark is just 20 marks, that workings we can fetch you only just 5 marks. I get him. That is what makes some students to be failing. That calculation alone will fetch you like 5 marks. So why the major requirement, even if it is just 4 or 5 lines, it will fetch you 15 marks. So always look out for the requirement. Very, very important. The requirement will tell you what you are looking for in that organization. So I have statement of profit or loss for the year ended. What's the period? December 31, 2023. Okay. Since I have that, my currency sign is in naira. Okay, so now everything, the way you have it there, you just copy and paste. Please, somebody should open it from their side and figure me. We have revenue. Then I have my cost of sales. Then I have my gross profit. After gross profit, what do I have? Accountant.
Distribution
costs. Distribution
Distribution
costs.
cost.
What again?
Administrative costs.
What again?
Finance cost.
Finance costs.
What again?
Investment income.
Investment income.
Yeah, what again?
PBT.
Then PBT.
Next.
Income tax expense.
What again?
Profits for the
Profits
period.
for the period.
Okay. So this one will now be profit. I think that's all right in that question, right? Isn't it? Accountant, that's what we have on that, the first information we have there.
Yes, sir.
Okay. So it will now be, because you know they are selling up a particular what information and they've given us the additional information. I will call this one profit for the period from continuing operation. Then I will also have profit from that asset after I open my what, prepare the new account for it, but we both do it together for easy what understanding. So profit net of tax from discontinued operation. Then you now have your profit for the period. So let us see how we both arrive there. So we are trying to carry ourselves along. Initially, don't forget that we have initial revenue, right? How much do we have as initial revenue? You got me, accountant. Others, others,
475 410.
410. Okay. Now, in the additional information, do we have any revenue that's leaving that particular asset, that from the asset they want to dispose? You know, they want to sell the branch that is in Kano, right? They want to sell the branch that is in Kano due to economic crisis.
Yes.
So how much is the revenue?
14,000.
Cost of sales, how much?
200. 154.
154.
Yes.
Do we have cost of sales?
Yes,
For
sir.
discontinuing, how much is that?
10 to 500. 250, sorry. 10 to 50.
Okay.
10,000
So I will come to my distribution cost, Abby.
Yes.
How much is my distribution cost?
60,400.
200, Abby.
400.
Minus, how much is the distribution cost there?
500.
Admin cost.
54,150. Minus
how much?
1,000.
Finance cost.
14,450. Minus 250.
Okay. Now, this investment income, accountant, nothing will happen to it. It will not be affected. I get it now, because investment income always come from the investment of the PC. I repeat, the investment income will always come from the investment of the PC. And you know that the investment income always comes from your what? From your other investments. For example, now maybe through your investment, you know we have financial instruments, right? For those who are coming in skills, I think I was the one who taught you guys financial instruments, right? No, sorry, Mr. Moses. Mr. Moses taught you financial instruments. And for those who joined the class last night, we did financial instruments. And believe me that we have something that we call investment income as a result of investing. Are you getting me? Also in your group account, everybody did this when they are undergoing their group account. You know we have ordinary investment, Abby, isn't it? Do you agree with me? Whereby it won't be an associate. Accountant, you agree with me? Hello,
yes.
Are you there?
Yes, sir. Yeah.
Okay, please. Mr. Solomon, Mr. Johnson, others, I hope you are following me. It's only the woman that is
yes, sir, we are
participating.
with you, sir.
Others,
We are with you.
okay. Thank you. So That means that the investment income is telling us that the company alone, because this is a group account that you are preparing. I get me now. You are only separating the particular branch, what you are categorizing for them. As a result of, you no longer want to operate it, and that is what you will remove from your from your financial statement, basically on this profit or loss account. They have no involvement with this investment income, except that the examiner lay emphasis on one particular investment income. Let me use that as a case study. If they lay emphasis that they have investment income, what are you going to do? That it is an income to them. I get me now. To that asset you are discontinuing. So what you are going to do in that scenario is that take that income. I get me now. Remove it from the investment income. Please remember this statement too, and don't quote me wrong. In as much if they categorize investment income with the asset they want to dispose of, especially for the sake of group, that means subsidiary. So that investment income, if they should lay emphasis or they pinpoint information on it, what you will do is that just remove it from that investment income. I get it now, and you will add it back. I get it now. You will add it back to who? You will add it back to your what? To the profit after the period. Or better still, if I get to the next solution page, I will come back to it. Please, somebody should remind me when I get to the next solution page on this same question. I'll come back to that investment income. So I have my income tax expense. Abi, how much is it? Accountant.
Income tax expense. Income tax expense 51,300. 51,300.
And they gave us a tax rate, Abi?
35%.
Yes. 35%.
Thank you. You now stop where I stopped. If you see this kind of question, where I stopped, you will stop there. So what will you now do? Then I will now come under it. I will now write my note to account. I have net of tax, profit from discontinued operation. So without giving yourself unnecessary headache, accountant, all you just need is that all the additional information that they gave you, just bring it, copy and paste. You have revenue. The revenue they give, how much? In the additional information, I think you said 15,000.
14,000.
Am I correct?
14.
Okay, 14,000.
14,000.
Thank you. You have cost of sales, Abi?
Yes.
How much?
10 to 15.
How much will be my gross profit?
$4,250.
Okay.
$3,750.
No, it's
It's
3,750.
3,750.
Okay.
No, 14,000 naira minus 10,250.
10,250. 3,750. 750.
I don't know. Okay. Sorry.
That is why it is always good that in class there should be check and balance. So 3,000 750. So what do we have next? We have distribution cost. Abi?
Cost, yeah. Yes.
How much?
500.
You know it is an expenses, right?
Yes.
Yeah.
Okay. What again? Admin.
Admin cost.
How much?
1,000.
What again?
Finance cost.
How much?
250.
What again?
It's the tax
That's all.
rates.
That's all, Abi.
Yes.
Okay. Now let me now come back to the statement of investment income. If they give you that investment income as a result of what discontinued operation that is belonging to that particular group they want to dispose of, so you just bring it under, either you put it under your gross profit or you will bring it here, because you know that that investment income will boost the profit that you have in that what, in that particular group, that particular segment of the group. You just bring it here. You remove it from the main account, then you bring it here. But in as much that they did not give you the investment income, accountant, will I tap it? Will I do anything on it? Will I adjust it?
No.
Do you agree? Do you agree with what my sister said? Do you all agree?
Yes. Yes.
Okay. Thank you.
Sorry to drag you back, sir. The investment income, are we to add it or subtract it?
We're not doing anything.
Subtract it. You will not do anything. But we only said that
As if we are giving,
if you are giving, you will add it. You know, it will be in positive. Let me, for example, now I'll clean it. It's not part of it. I have investment income that relate to that particular asset. If they tell us that it is 1.5, that means that I will just this minus this minus this minus this plus this. It will be in positive because it is a what? A profit. It is an income. So you will not remove it. Are you getting me now? You will not remove it. But in as much that the examiner, in as much that the examiner did not give you any information relating to that, what will I do? Me too. I will not bring it in. I will not form my own question.
Sorry, sir. You were saying that we could treat it by bringing it after finance cost, or you were saying something about the cost for gross profit then. Hello?
Yeah, I can hear you now.
You know, you were saying that there are two treatments to it. Either we do it after finance cost, but you were saying something about bringing it after gross profit too.
Very much. Thank you very much. I said you can do it in two ways. Fine, it is correct. The first way is what I explained now. Are you getting me now? That you can bring it here, remove it from the previous ones. Are you getting me?
Yes.
Are you following me now? Or,
yes, please.
Or because you are removing it from the total account, because that asset will no longer be operated. Still remove it. Are you getting me? Still remove it. So you might not bring it here. I hope you are following me. You might not bring it here. After you now get everything here. Are you getting me? You can now come and add it back here. Please, accountant, that's the two ways I'm trying to explain.
Okay, am I doing one?
You're not alone.
Please, can you hear you?
One.
I can't hear him too.
All right, good. Thank
Sir,
you.
you are muted though. We can't hear you.
What if I say I can hear him now?
I will say it's not true.
Maybe someone should call him that we can't
For
hear
me,
him.
I'm hearing. For me, I'm hearing him.
He's muted. You cannot
What
hear
if
him.
what if you are not saying the truth?
Hello, can anybody hear me? Hello?
Yes, I can hear you.
I hear
Professor
you.
is having issues, network issues. Let's just calm down and wait for him. He's having network issues. He'll come back very soon.
Please, let's panic as we can hear.
Please, the person that is reading out the question, where do you get the question from, sir? Hello,
Check the
Joy.
group
It's like
chat.
you are the one that had the question. Where
Check
do
the
you get it
group
from?
chat. Check the group chat, the note.
Hello. Please, sorry, the network logged me off. Please, can you hear me now?
Yes, we can hear you now.
Okay. Can you see my screen from your side now?
Yes. Wait, it's loading. Okay, now I can see it.
Okay.
I can't see your screen.
Hold on, it's still coming up.
I see it now, sir.
All right. Okay. So what I'm trying to say the other time, before the network goes off, is that I said, I hope you are following me.
Yes.
Yes, sir.
Okay. I said that once you finished what you are calculating from net profit from discontinued operation, bring it here. Then that investment income, you will now add it here. Are you getting me?
You can't see your screen, no. Please, I can't see your screen.
Others can see now.
I can't see your screen. I can't see your screen.
No, I can't see it.
I can see the screen, no, it's showing.
Don't mind that guy.
They should not mind me. No, serious. I'm seeing the screen.
The screen is showing. I can see the screen as well.
It's showing.
We cannot
No, but
see the
seriously,
screen. Me, I
we
cannot
can see the screen.
that I
We
cannot
can
It's your,
see.
it's most likely your network because I can see it.
And log in
I
back.
can see
Yes,
his
it's your
screen. It's
network.
showing.
I can
It's
see the
showing.
screen. No, please, let's continue.
I
Thank
can
God
see it
I'm
as
not
well.
lying.
Please, I can't see the screen. Oh, I
Please
can't see
log
it
out and log
too.
in
How come you
again.
are
Hold on.
seeing
It's okay. Don't worry.
It's on network. It's on network.
Don't worry. I want to reshare now. Others, sorry. So they will see that we've done justice for them now. I've reshared.
No, I think most times when your screen is not showing, maybe it's network issue. Just leave the group and join again. Then the screen will pop up automatically.
Yes.
Instead of disrupting the class.
It's okay. Can you see now? I've reshared.
Yes, sir, we
Can
can
you all
see
see
it
now?
now.
Yes, I can see.
Okay. Okay. So as I was saying the other time, I said that if you have this kind of information, that the other way you can do it is that once you finish your net of tax from discontinued operation, less that investment income, still less it from the original one. Then if you don't add it to this one that you do, just bring it inside this bracket. They will still give you the same information. That it's the same information I mean is that what you will get here, if you bring your investment income initially, and if you don't bring it here, if you still add it together, you still get the same thing. That is the two ways I said that you can do it. I hope it is understandable now.
I follow.
No, I don't understand.
Please, if you say that, because we are looking at the applicable tax rate, whereby we're going to remove the income tax expenses. So if we had it here, won't it affect the taxable income?
Fantastic. Thank you for that question. Now, I said that if you are bringing it there, the investment income, mind you, I make one statement that what the examiner is trying to tell you will matters how your treatment will be. Abi, my brother, you know that
Yes.
what the examiner asks will determine how you will treat your information. Are you getting me? If you are bringing it in, if you are bringing it in as much that what you do here is that you discontinue it, you less tax from it. Are you getting me? Also, if you are bringing the investment income in here as well, it will now be, as I'm saying earlier on, as the question you ask, thank God that you even capture that area. Thank you. I will have escaped it. Let's say, for example, profit from net from discontinued operation. You know that for every income, you must pay tax on it. Let's say, I will claim it, it's not part of the question. Please, somebody else should not drag us back. We are only using it as an example. Let's say we have 1,005 from discontinued operation plus, you know that the investment income, I said that you can now bring it in. This, and what I want to bring chip in is that this one is meant for those who over sabi, or let me use the word, who understand what they are doing. But if you know that you will not capture what you are doing very well, that let me shall pass, make I go. Please don't use this second method. It is for advanced and those who can capture what they are doing. But if you know that you do mistake, use the first one that I explained earlier. So let's say, for example, that investment income, I have 1,008. So I'll just bring you the tax, which is 0.35. Are you getting me? You get what you are looking for. My brother will ask the question. I know you can capture that. And for my other sisters in the house, you can capture that. But for me and you, a layman student that just want to understand the concept and just pass this ICAN, are you getting me? Please don't use this second analysis. I repeat, don't use this second analysis. You can see that I'm bringing in my tax again to charge on that investment income. You can see it will look complex to you. So do the one that is not complex and continue. Are you getting me? So just follow. If you have investment income, if the examiner just ask you or give it to you, keep it in here, charge it straight up and move on. But if you know what you are doing very well, are you getting me now? You know what you are doing very well. If you finish this one, you can bring your investment income and charge tax on it. You still get the same thing. I hope I'm making my sense.
Yes.
Any question? I've clarified myself, please. So, because some people want to drag us back.
Please, I want to ask another question. Okay, there are scenarios whereby the question may not give
I'm
us,
with you, sir.
They will not expatiate the details of what make up the profits from discontinued operation. They can only give us just the profits. Then they can give us that, okay, they have an investment and this is the investment income. Is that what we are trying to do here?
Yes, that's what we are trying to do here. If they did not make mention of anything, if the examiner extends that they refer you to a certain information, that information will have comma. Comma means that they will lay emphasis, they will ask, they will chip in something that they want you to treat. But where the examiner is just silent, that they just give you just a phrase of word, you too, you know that when you just see, you know, for example, I want to use a funny statement that, you know, somebody who is married now, you know that you and your wife, when you are working together, and somebody, a beautiful woman is now passing by you, what will you do? You just say, I'm sorry for those who understand Yoruba and those who doesn't understand Yoruba. What I mean is that let me make I carry my face away. That's the meaning. My wife is beside me. Make I carry my face away. That is what I meant by that statement. You too, just look away from that question. So far, they did not give you any information, but make sure you read it too. But where they lay emphasis that they want you to treat something, you too treat it. And where they don't want you to treat anything, they just give you a words. I get me now. You too, just look away. And mind you, accountant, you know, I make mention of something earlier that if at the end of the period, everything that we are doing, I getting me, one of the criteria is not met. I repeat, if one of the criteria is not met, accountant, what will you do? I will come back to that after this statement. Please just remind me, though I don't forget things like that. In case it escaped my mind, I'll come back to that. If in a scenario there is no one of the criteria is not met, what will I do? I will come back to that. But let us finish this so that we can continue. So, you know, in this question, we don't have investment income, right? So, accountant, oh yeah, give me PBT. What do I have for my PBT? Oh yeah, figure me out. What do I have? 2,000. Abi?
2,000.
Okay. So, you know, I have my income tax, Abi. Income tax. You know, we said we are giving 35%, Abi, of 2,000. How much is that?
700.
About me 700, Abi. So what will be my profit after profit for the period?
1,300.
Of discontinued operation. Let me shorten it. 1,300. Abi, you know, I've gotten this ahead. So in as much I've solved this, what will I now do? I will just come back to what I'm doing here. So the tax I got from the information I solved earlier, you know, it is 1,300, right? You just bring your 1,300. Then what do you have for your profit from discontinued operation? You know, no, is 1,300 my tax? No.
No,
My
700.
tax is 700.
700.
700. So my profit net of tax from discontinued operation is 1,300, right?
Yes.
Okay. Yes. So I've not finished. So my investment income that they gave us in the question is how much?
7,605.
7,605. Okay, I will now come up. So, okay, let me clean this one. I'll clean it and bring it back so that everything will rhyme.
Sorry, please, where did we get 700 from? My network is.
That is our tax. Our tax,
35%.
2,000. So I got that. Oh, yeah, figure me. My revenue. Chiamaka, please go ahead. Quick one.
461,410. For revenue, 461,410.
461,410.
189,904.
189,954.
904.
904, right? Like this?
Yes. Yes.
Oh yeah, my gross profit.
271506.
271506. Oh yeah, figure me about me today.
59,900.
59,900.
53,150.
53,150. 14,200.
14,200.
Oh yeah, about me today.
Then profit before tax is 15.
15. Abi?
861.
What do we have? Profit before tax.
151,861. 151,861.
861. Abi?
151,000. Yes, 861. Then
Sorry,
50,600.
don't mind my item.
50,600.
So what do we have here?
50,600.
50,600.
So what do I have here?
One
261.
261, Abi?
Yes.
Yes, sir.
Okay. So that is profit for the period from continuing operation. So I will now add profit of net from discontinued operation that we got earlier, which is under what we saw here. So add it together. So profit for the period.
102.
102,561.
561.
61.
So that means that, so what this standard is telling you is that you need to state, when we were reading it, it tells us that we need to separate it, and we've separated it. That means the profit for the continued operation, the one that is still existing, is 101,261. So the one that we want to discontinue from operation is what? 13. But the profit that still belongs to that same period is 102,561. Mind you, see, one of the simplest standard in for this level is IFRS what? 5. One of the simplest, because you don't have much information. Once you solve it like this, even if they give you SOFP, just do plus or minus, then the new information, which is the additional information, we add this like we did here. Something like we have here, notes to account network. Can you hear me?
Yes.
Okay.
We can hear you.
Yes.
Yes, sir.
That means that the notes to account, whatsoever you have in your additional information, just add it like that. Copy and paste. Just add it up. Plus or minus. Then you are good to go. That is all about IFRS 5. And the most funny thing about IFRS 5, as I've said earlier on that you should remind me, you can see that me too I'm following, I did not forget, is this. Accountant, if one of the criteria is not met, I getting me? If one of the criteria will not met, what will I do? Let me just put it here, just in case you want to. Where is this? So in case, let me put it here. In case one particular criteria is not met, I get him in accountant. I will send the solution. I just want to put it down for you in the written form. Do you want it, or I should just say it? Should I put it in written form, or I just explain it?
Sir, write it. Write it, sir.
Okay. In case one of the criteria of S5 is not met, all you have to do is to 1, state the criteria. For the examiner, that the first thing you will do, you state the criteria, you tell them that, okay, so criteria is not met. I get me. You will tell them what is the criteria for IFRS 5. You know, that is mass. You will bring it in. So the next thing you tell them, you now come here that, okay, the next thing is that you don't need to solve for any calculation once a criteria is not met. 3, analyze your reason. So that's what you are going to do. You know, I'm only putting this down for you in a kind of written statement that in case you want to solve this kind of question, what will you do? Look at the question. Maybe, for example, let's come back to our question here. The examiner tells us that due to economic crisis in Nigeria, Badalona has a branch in location to be sold, let's say on 1/10/2023. But the asset is not available in its present condition. Accountant, I'm now asking you a question. Are you preparing anything now based on what I wrote earlier?
No.
Are you preparing anything?
No.
No, sir.
Why? Who can tell
Because
me?
one of the criteria is not met.
Because
the asset is not available for sale.
Fantastic. That is what you put down. No? You don't need to solve any question. If 20 marks is awarded, I'm 100% give you assurance that you will score that 20/20. I'm giving you the assurance that you will score 20/20 because one of the criteria is not met. So that means that it does not meet the criteria of what? So one particular information has disqualified. If the other 4 is present, one has disqualified it to be categorized as what? Discontinued operation. But once the 5 are met, will I prepare my solution or not, accountant?
you will prepare.
Thank you. But where one information is missing, one of the criteria is missing, what will you do? Will you prepare or you will not prepare?
You will not prepare.
Fantastic. Please, any question before we move to the next one? Let me see. Please, any question? Oh yeah, Mr. Kadi.
Okay, good afternoon, sir.
Good afternoon.
But please, in addition to this question we solved,
Okay,
let's just assume that they want to sell the branch in Kano and we have a profit on disposal. Please, how do we treat such question if you are giving additional information?
Okay, that means you have a gain on disposal, right?
Yes, profit on disposal, exactly.
Okay, thank you very much. So as you have it here, I'm coming, please. Only 3 people I will attend to. The next person is Mr. B. Then the last person who raised his hands up. Those after you, just 3, so that we minimize our time. So now, if you have that kind of information, gain or loss on disposal, are you getting me? Gain or loss on disposal. What you will do is that I will advise you to come to your solution here. Are you getting me now? Your solution here. Bring it in. Are you getting me now? Bring it in under you can do it in 2 ways as well. You can bring it in profit on disposal. Are you getting me? You can bring it in to your note to account. I get me, because you are disposing of that particular what asset. Also, you can bring it in, and the way I said it earlier on, the profit on disposal from discontinued operation, Abi, you will bring it under here. You can bring it under profit from disposal from discontinued operation. I get me now, because it is a profit. You need to separate it as well. You must not add it. Hello, can you hear me?
Yes.
Yes, sir.
Yeah.
Yes, sir.
You must not add it to your what? Continued operation. You will separate it. Either you bring it to your what? Notes to account, or you bring it under your what? Profit from discontinued, profit from disposal. Use that statement. Profit from disposal of what? Discontinued asset. You will now bring
Sorry,
it
sir, please
under
repeat
here.
yourself again. Sorry, please. Network, please.
Profit from
We should bring
disposal.
what in?
Bring it
Then we lost
under
you there.
profit net of tax. I get me. Once you get this one, in case you have the gain on disposal of that asset, I get me now. An asset, what you will do is in two ways. Either you bring it here, under here, add it together, plus this 1,3, you will bring the total up here. Or better still, an asset, what you are going to write is that you will now put it down like profit from disposal. I hope you are capturing that statement. Profit from disposal of what? Of assets from discontinued operation. You must make that statement from disposal, so that they will know where that profit is also coming from. Mr. K, I hope I've answered your question, sir.
Yes, sir. Yes, sir. Thank you.
Mr. B, what's yours?
Are you going to charge tax on that profit?
Thank you. Fantastic question. The tax you are going to charge or need is that you need to know what the examiner is trying to ask you. But for me, as a tutor, what I is that I will not charge any tax on it anymore. I get me now. Because that particular asset has been suffering a particular tax. Don't forget, the rule of advance tax is now coming in now. I get me now. Don't forget that you are told that an asset cannot suffer tax twice. You don't forget that you have something that we call capital allowance, right? Are you getting me? You have capital gain tax, right?
Yes.
So if you are now charging it, don't forget that initially on the revenue of that particular asset, you've paid tax on it. Are you getting me?
Yes.
You've paid tax on it. So that gain will flow with the what? With the profit from the beginning. So me, as your examiner, as your tutor, I said don't charge tax on that gain on disposal. Because if you have loss as well, you go and remove the loss, and you won't charge any tax. So for me, hello, please quote my statement too. I'm not saying generally, but for
I can't hear you again, sir. Maybe it's network.
It's on hold, no network now.
sorry, I'm sorry. I'm trying to navigate to other network. The network is kind of fluctuating here. Please, can you hear me now?
Yes, we can hear you.
Okay, so sorry for the transmission cut. So as I was saying earlier on, I said that you don't need to charge tax on that gain on disposal. Are you getting me? You don't need to charge tax on it. So, Mr. Atokwe, please, what's your question?
Sir. All right, sir. You gave us acronyms for the criteria.
Yes, sir.
I just want to. How do you identify it with the mass on from number 1 to 5?
Thank you very much. Without looking at it, I get me. Let me be telling you. The first statement is management commitment to sell that asset. I will still go back to it too. The A there means active buyer must be present. The next one is that asset must be available in its present condition. I hope you are following me, sir. Mr. Tope?
No, sir. The network was fluctuating. I can hear you now.
Let me repeat my statement. The first one is mass. I said M stands for management commitment to sell off that asset. A stands for active buyer must be present. The next A stands for asset must be available in its present condition. The S stands for sales must be what? The sales must be available within one accounting year. That means from the date of classification to the end of accounting year, which is with 1 year, Abi. And the last S means that the sales must be highly probable. Let us now see. So that it should not be that. I'm G-Wewu. Okay, so I said the M stands for the management, A stands for the active, the next A starts with asset, the S stands for sales, while the last S stands for sales must be highly probable. So that for easy understanding, that's why we use the word mass. Are you getting me? That's why we use the word mass. Mr. Nee, you are the last person I will attend to. Please, quick one, please, quick one.
Sir, you've not attended to B.
B. I've answered B.
No,
I answered.
That person was not B.
Yeah, B. Go ahead, please.
Sir, sorry, to just
okay.
When you were explaining investment income, I don't really understand. Because you said we should not add it, but then you added it. Were you trying to say that you add it to the note or to the main
I said that, well, yeah, what I pinpoint there is that if the examiner did not give you any investment income relating to the disposal of the group, which means the segment you want to sell off. So what I mean is that you too don't go and do extra thing. But where the examiner did not give you the information of investment income, are you getting me now? Where they give you investment income for the group, you too, nothing will happen to it. You will not touch it. Just paste it the way it was before. You're just going to paste it like that. But where the statement that I still repeat that, and I will still repeat, is that if they give you information that has to flow with your new segment, that means that information too must also be captured. Do you understand now? B.
Okay, so it means that if they give us additional information of investment income for that particular this thing that we want to sell off, it means that we're going to put it in the notes to the account. That way
Yes. So, Mr. Nee, thank you very much, B. Mr. Nee, last person. Quick one.
My question is based on, as you said, that it's based on what the examiner is asking us. Because as time goes on, the profit that we transfer, in case it is in a group of company, then I just want to know that the consideration of the NCI before moving the thing. I think when we get to group accounts, we'll look into that, sir.
Okay, all right, no problem, sir. Okay, so now please permit me as I move to the next topic, even though the time is fast approaching and we are almost at the time we meet to close, which is by 3. So let's see what we can cover in this new standard. And in the next class, we continue from where we stopped. So now, the new standard we want to look into is operating segments. We are talking about IFRS 5 earlier on now, a few minutes ago, or let's say a few seconds ago. So now, we now want to look into operating segments. This operating segment, what does this say? What is it trying to tell us? Where is it pinpointing to? Let us go together. on this journey, we have the introduction, definition of term, reportable segment, segment not yet generating revenue, determination of reportable segment, exemption to threshold, and disclosure. Now, IFRS 8 requires an entity to report financial and descriptive information about its reportable segment. What does reportable segment mean? We get there. Don't forget that you too, a segment can be that you might have another segment in another state, whereby those segments, that segment can be what? Can be a group, it can be a particular, maybe sales department, it can be a logistics department, it can be let me put admin department. You know, in every organization, we all have different segments. Abi, we have the finance department, we have the IT department, like that. And each department might be given the autonomy to report. You know, for example, now, permit me, for those who is working with all this manufacturing industry, you agree with me that we have some segment that maybe the sales, everybody might be given a task or a target that your department, you must bring in this, you must submit a revenue, you have a target of 50 million naira within the first quarter. Another segment too, they will give them another quarter that whichever segment that meets the target, they are entitled to bonus. Accountant, I hope you are following me. They are entitled to the bonus. That means that segment now has to do with different departments in an organization. I hope you are following me, sir. Amas in the house. So now we now have segments.
Sir.
Okay, we now have segments. Segments are components of a company or department or division of a company. I have my operating segment is a component of an entity that engages in business activities from which it may earn revenue and incur expenses, including revenue and expenses relating to transactions with other components of the same entity. Now, what this means is that I just want to use part of us as an example. Me, Mr. Sadiq, Chiamaka, Mr. Johnson, permit me, for those who I did not mention their name, sorry for that. So I just want to use that as an example. If we are working with Mr. Adeniyi, Mr. Adeniyi now is a company, Mr. Adeniyi group of company, and is into the production of textbooks. In my own department, I might be the sales manager. In Chiamaka department, they can be in charge of how will I put it? In charge of petrochemical. Yes, let us use that statement. And the other person too, Mr. Johnson, might be in the segment of their own segment can be that they are the one selling glue, what they used to gum books together. And mind you, you will be given the autonomy that you can make sales to the outsider. I get me now. So that means that in Mr. Johnson segment that they are selling glue, they are giving a target of 50 million for the first quarter of the year. I, that I'm into the publishing and printing, they are giving me 50 million. White Chiamaka too, in our own petrochemical segment, they too, they are giving 50 million. So that means that each segment is a what? Operating segment. They will incur their loss, they will incur their expenses, and also they will generate revenue. So at the end of the reporting period, they will consolidate all the information and submit to the company's accountant. Now, reportable segment, what does it mean? It means that it is an operating segment that its material information such as revenue, assets, liability, profit or loss needs to be provided in the note to the financial statement for performance assessment purpose. That is an operating segment that is discrete, its discrete financial information must be provided to users. What does the last statement mean? It means that if you meet the criteria, I get me, for this particular standard too, you have a rule that will guide you. Once you meet up the threshold, that means that you will be a reportable segment. But where you did not meet up the threshold, that means that you are not yet a reportable segment, but we've not gotten to there. We are moving gradually. We now have the chief operating decision maker. Is an officer who identifies a function for the allocation of resources and assessment of the performance of the operating segment of an entity, and not necessarily a manager with a specific title. That means that who is the supervisor that will now be maintaining or that will be supervising the entire segment. You know, in a company, we always have the overall supervisor, they have the assistant supervisor, that in each department, they will know what they are doing. In this department, what are you doing? In other departments, what do you do? Like that, like that. Accountant, I hope you are getting it. Can you hear me? Chiamaka?
Yes, sir.
Sir, I can hear you.
Okay.
Yes, sir.
I hope you are getting it, Chichi.
Yes, sir.
And others. Okay. All
Yes.
right. So now, reportable segment.
I have a little question, sir.
All right, sir. Go ahead. Quick one. We are with you, sir.
Talk.
Okay.
Hello, sir. Please, what is the meaning of this discrete?
Discrete means that
Hello?
you have the I can hear you. You have the autonomy. You can do. You have the goals. You have the power. You discrete. You have the power to do so. Something that you have power to do. That's the word discrete.
Okay.
You understand?
Okay,
that means, you know, for example, now when you have a discrete, they gave you a discrete information that is a vital information that is very, very genuine to you. Are you getting me? So for, you know, in English terms, for those who study English, please don't quote me. For English terms, you can have another meaning. But as far as this particular course, SBR is concerned, the word discrete means that you are giving the power. You know, we have the very concept of understanding English. In a particular field, their own terminologies might be different from other terminologies. For example, now we have economic environment. In a general terms, the economic environment they are referring to means the entire Nigeria. I get me, sir. And as far as you're concerned, what is your own economic environment? It's your company and the asset of that organization. Hope you are getting me, my brother.
Yes, sir.
Ahead.
Thank you, sir. Thank you, sir.
Yes, sir. Sorry, sir. So can we say that a reporting segment is an operating segment?
Yeah, it's a reporting segment. You will know the reporting segment. Don't let me the final answer now. When we get there, we are going there bit by bit so that we will not rush it. You will now be the one that so what I ask, so it is still in the notes that we have. But let's go. So we said that welcome. The main aim of IFRS 8 operating segment is to ensure that entities disclose information to enable users of FS, that is financial statement, to evaluate the natural and financial effect of the types of business activities in which it engages and the economic environment in which it operates. I get me now. That means, what do you do? The type of business you do determine that, okay, in your own organization, do you have different departments? In some organizations, they only have 2. In some organizations, they have 5. In some organizations, they have more than 5. So your own business will determine your own operating segment. But basically, is that what IFRS 8 want to tell us is that it just want to allow us to know and how to group which one should be our reportable segment and which one is not to be a reportable segment. But let us go. As we continue, we know that for a particular segment to be what? Reportable, which means the operating segment to be reportable. Like my sister said, what are the criteria, or what is the rule? We will get there. Let's continue with their statement, with this statement that segment not yet generating revenue. Ordinarily, for a segment to be regarded as an operating segment, it should have the capacity to generate what? Revenue. Are you getting me? It should have the capacity to generate revenue. My sister, I hope you are following me now. For you to be an operating segment, are you getting me now? For a segment to be regarded as operating segment, it should have the capacity to do what? My sister, are you following me now? To generate revenue.
To generate revenue.
Yeah. However, IFRS 8 requires a segment, usually a startup operation, a new business, which engages in business activities for some time before it starts generating revenue, should be regarded as operating segment during the operating stage, provided that it meets other criteria. That is, it should be regarded as an operating segment, but provided it has discrete. My brother who has discrete, that means they've shown their concern that they will be generating revenue. It has discrete financial information that is reviewed by the COD, which means Chief Operating Officer, assessing the operating performance. That means that even though it is a newly business, you can still categorize it as operating segment, because you will have tells or state in your information that you too will be generating what? Revenue. Determination of reportable segment. For you to be a reportable segment, don't forget that the rules here of what this particular area is telling us under this standard is that operating segment, for you to be regarded as operating segment, you have the capacity to generate revenue. Okay, if you are now generating that revenue, what will now make you to be a reportable segment now? We now want to see it. Now, determination of a reportable segment. And as entities shall report separately on the information about operating segment if it meets any of the following quantitative threshold. I follow me now. Quantitative. That means quantitative means that a figure. Are you getting me? Qualitative means that information. For the sake of your ratio, please, I want you to be what? Memorizing some things now. Quantitative, that means it goes with figures, calculation. Qualitative, you have to report, is a theoretical information. Please, I hope you are taking note of everything I'm giving you that is beyond the scope of this standard. Please.
It's noted.
Okay. Now, I now have revenue threshold. An operating segment should be reported. If the segment total revenue, that means that a operating segment will now be a reportable segment. For my sister who asked the question earlier, you can be a what? You will be operating segment once you can generate revenue. Okay, that is operating segment. Now, that same operating segment, what will make you to be a reportable segment? We now want to follow the threshold now. What will make that operating segment to be a reportable segment is now based on one, is that the segment total revenue, internal, external, is 10%. You must meet up with 10%. I get me now, accountant. You must meet up with what? 10% or more of the entity's total revenue of all operating segments. 10%. Once you meet 10%, you will be a reportable segment. But where you did not meet up, you are not yet a reportable segment. But in the future, if it is a new business, I quote it again. If it is a new business, we will allow you to be a what? Operating segment, because we know that you have the intention of generating revenue. Please don't mix it up at all. I want to repeat my statement for clarity. If you will be operating segment, you must have the intention or the capacity to be generating revenue. Okay, that same operating segment, for it to be reportable, you must meet 10% of the total revenue of all operating segments in that organization. So that would make you to be a reportable segment. Then we also have asset threshold. What does it mean? An operating segment should be reported if the segment total asset is 10% or more of the entity's total asset of all operating segments. Mind you, accountant, your examiner can only give you information on revenue threshold. You don't need to calculate asset or profit or loss. In as much you know the requirement of the question. Please, it is very, very important. So that for the sake of the exam, you will not go and be doing unnecessary information that you are not meant to be doing. Another one is profit or loss threshold. An operating segment should be reported if the segment P or L has absolute amount of 10% or more of the entity's total profit of all operating segments that reported P profit and the entity's total loss of all operating segments that reported loss. That means for profit or loss threshold, if it is profit you are using, we will use the profit. And if it is loss you are using, you will use loss. Mind you, accountant, under this standard, normally, do we always use loss to assess our performance in what? In reporting? No. We don't always use, we believe that loss, it has reduced our what? Our organization performance. But this IFRS 8 is trying to tell you that, okay, for you to make that loss, is it that one segment is making the loss? Or is it that the entire segment is making the loss? So that is what this particular standard is trying to tell us. Note, to be a reportable segment, are you getting me now? To be a reportable segment, it is not compulsory that all the above three conditions must be met. I can't. Please take note of that statement too. You know that under IFRS 5, if one is not met, the others are valueless. Isn't it? If you are following me, if one is not met, what happens to others? Are we making use of it or not? Are we using it? If one information is missing, are we using it under IFRS 5?
No.
Thank you. But for IFRS 8, this one is giving you an exemption rule that even if the entire information is not met, at least one of them must meet the criteria. That's what we are after. I get me now. It's just as if that, let me use a clear example. Let me use me and Mr. Johnson. Are you getting me? Mr. Johnson, you are man of the match of today. So me and Mr. Johnson, you know that me as a tutor, I want to bring myself like a student now. If we are now me and Mr. Johnson, we are friends. Are you getting me? I, as a person, I might love taking what would they call it? Zobo with ginger. Mr. Johnson might prefer ordinary Zobo alone. It is not that it cannot take Zobo and ginger, but his own favorite is just pure Zobo. But what this standard is now telling us that, look at me and Mr. Johnson, we now have Zobo. We are now visiting Mrs. Chiamaka at home. She's offering us Zobo with ginger. Please, accountant, can both me and Mr. Johnson take that Zobo? Can we both take it or not?
No.
No. Okay. Yeah. Okay. But sir, somebody can still take it, Abby. My brother who said no. Somebody can still take it, Abby.
Yeah, somebody can still take it. Somebody can
Thank
still
you. So you can see now that, but somebody can still take it means that at least the Zobo is present. Me, I can take it. Why Mr. Johnson might not take it? If we get to somewhere else, if we are visiting Yetuday's house, if Yetuday is offering us ordinary Zobo, please, me that love Zobo and ginger, can I take it or not? I can be worse. Skeptical. I might be doubting it that should I take it because it's not my favorite. Abby, I can be doubting it that me, I did not like it. At Yetuday's place, Mr. Johnson can take that Zobo, right? Accountant, isn't it?
Yes.
Yes.
Okay. But me, I might not take it, Abby.
Yes.
Thank you. So what I'm trying to say in a nutshell is that, let me now come back to what we are doing, is that I'm trying to tell you that where you qualify, others too will qualify, but they might not have the same mark. Likewise, another example is that this exam you want to write, somebody who scored, are you following me? Somebody who scored 99 over 100 in this SBR, and somebody who scored 50. Please, the two of them, who pass? Accountant.
Both
the two
of them
who pass? How?
Both of them.
How?
Because 50 is the pass mark.
Tell me.
50 is the pass mark.
That is the rule. That is the rule. 50 is the pass mark. So even if you like, score 99, and in other course, by God's grace, you qualify this diet, and somebody else now you scored 99 in SBR, 99 in case study, 99 in tax, you now get to audit, you now score 49. Please, do that person qualify?
No.
Okay. And somebody who scored 50 in SBR, in advanced tax, advanced audit, and case study, please, the person who qualified between the two?
Person who scored 50.
You can see. That means that the rule says that score 50. So once you score 50, what happened? You don't go with that. Are you getting me? If you score 99 points, can you come? That doesn't mean that the other person too will not skip through. But what the standard is telling you is that at least, one must be present for your what? For your reportable segment. If that segment pass revenue and fail in asset, that asset will still be a reportable segment. And if that revenue pass profit and fail in revenue and asset, that same person is what? That segment is still a reportable segment. But if that segment failed in all the three, it will not be what? Reportable segment. So when we get to the calculation aspect of it, you understand it more better. But today, I don't think we will be able to solve the calculation because of the next class. But just for us to use this class to welcome ourselves. But by the time we go deeper, we'll be solving advanced questions. And mind you, I always expose my students to reality, what you can find in the exam hall. And also my colleagues too, what you will meet there. Let the rule and the principle guide you. if you also listen to our advice, those who listen, I can bet you all of them, those who are slow learners, they passed this study, this particular subject. Now, exemption to threshold. This exemption, what does it mean? Let us go. We have the 75% external revenue threshold. Right? 75% external revenue threshold. The total external revenue of all identified reportable segment must not less than 75% of the entity's total external revenue. If the total external revenue of all the identified reporting segments is less than 75% of the total external revenue, additional operating segments must be identified as reportable segments, even if it does not meet the 10% threshold. Let me now come down to our level. You can follow what I have on my screen. Let me break it down. We said that we want to that a total revenue comprises of what you generated internally and externally, right?
Yes.
Isn't it? Okay. Yes. Thank you. Now, it says 75% external revenue threshold. What does it mean? It means that I now want to categorize what are they generating outside the box. Externally, what are you generating? Externally, what are you generating? Because you will group everything together, because those grouped is what we are using to allocate or what we are using to report. Believe me, one of the standard that is easy to pass is this IFRS 8, my people. The ones you know what you are doing. See, no matter how simple a particular standard is, once you don't know what to do, accountants, you don't know it. There is no way, there is no two analysis for it. But once you know what to do, believe me, just as if that you just, when somebody is just looking, you are dancing inside an aeroplane. That's how it should be. So this is not telling you that this 75%, where a particular segment, maybe for example now, you have, let me come to my board. Okay. My board is saying that if I have a segment, I have the threshold says that 75% of external revenue, right? Abi, isn't it? Accountant, are you following me? I hope I'm not muted. Can you hear me?
Yes, sir, we can hear you, sir.
Yes.
Okay, I need to confirm. So, okay. The threshold is 75% of external revenue. Okay, we now solve a question, and that question tells us that you have 73%. Are you getting me? This 73%, please, has it meet up with the threshold?
No.
No, Ari?
No.
The rule is not telling you that those segments that did not pass or that did not qualify, you will now go back and pick them. When you have scratch, you have scrap that you think that is no longer useful again, you will now go back to it. Are you getting me? Can you hear me?
Yes.
Okay. So what we are trying to say is that if we now have any information that did not meet up with the criteria, it's now telling us that
Can anybody hear him, or is my network?
I can't hear him too.
I think he's muted.
I can't hear him too.
Please, can you hear me now?
No.
Yes, I can hear you.
Okay. What I was saying earlier before I was muted is this. I said that I want to throw a question to the entire house, and you now tell me your opinion. If ICAN should tell us by the end of this month that pay 400,000 naira and write one paper, or write the 5 papers, please, accountant, which one will you go for? Yeah, opinion now.
One paper.
I trust you. Oh yeah. Oh yeah now. Oh yeah. Let's make interactive, please. You said?
400,000.
One paper.
Why? You don't want to write the entire 5 papers?
No, we'll pay the 400,000. No.
You are not sure now.
So that means that, they have given us a rule. I get me now that there's option that if you know that you don't have the money, you don't write the 500 papers, the 5 papers. But some people, if it is borrow, they go and borrow that money. I can that I know how much and how stressful that exam is. Me, I will borrow that money and pay. Well, let me just qualify. Are you getting me? So it will be easier. So this segment is not telling you that, okay, for those segments, if you now measure, you now have 73%. For the ones you know that they did not meet up the criteria, you just go back, take them and add it back to what? To that 73%. So it will make it to be 75% threshold. Accountant, where you should look out for under this threshold is this. Go make sure you take note of this rule, this one, and this very well. Very, very important for your exam. For your exam, please take note of it. Because, I said it earlier on that they will not be giving you more of calculation, but you will have more of reports and analysis in your level, for this level. Are you getting me? If you are going to calculate, basically your calculation will be based on your ratio and based on your corporate, what's called group account. The others, analysis, you will report, you still calculate, and that report will fetch you more mark. So have it at the back of your mind like that. Okay, let us now see what the note tells us. That is, if the aggregate external revenue of the identified reportable segment is less than 75% of the total external revenue of the entity, then another operating segment that is closer, something that is 9%, we have 10% make it to be reportable. If we have 9%, that means 9% is very close to 10%. So you are going to take those segments as well and make them to be what? Reportable. This is to ensure that the aggregate or total external revenue of all reportable segments will be at least 75% of the entity's total revenue. Number 2 says aggregate rule. 2 or more operating segments below 10% threshold may be aggregated to produce a reportable segment. That means that you have a segment that is 7%. You have another segment that is 8%. And those segments are not reportable. Are they reportable? 7% and 8%. Are they reportable, accountant?
No.
No. Okay. But now, the aggregate rule is now telling you that, okay, if that is not the case, that you have like other segments that they are not reportable, what you will do is that match them together. Both 7% and 8%, match them together. That means you will add them together. 7 plus 8 give us 15, right?
Yes.
So That means that, let us continue the statement. It says to produce a reportable segment, if the segment have similar economic characteristics and the segment are similar in majority of the aggregation criteria, that means that if A, let me use my board to explain it. If A has 8% and B has 6%, and A uses revenue threshold, B also uses revenue threshold. No, both are using the same information, the same tactics to report. That means that the two of them, you will now group them as one and make them to be a reportable segment where everything you are calculating did not meet the criteria. That is when you will now think of the plan B. Are you getting me now? That is where you will now think of the plan B. But basically, you must first consider that your plan A, which is all the criteria, which is 10% criteria, 12% threshold are met, must be what? Must be considered before anything. Before you can go to whatsoever you now want to go to. Now, the third one says, which is the usefulness of information to users. Any operating segment that doesn't have that doesn't have any quantitative threshold, that is 10% criteria, may be considered reportable and separately disclosed if the management believe that information about the operating segment will be useful to users of financial statement. I repeat, it says that any segment that did not meet the quantitative threshold may be still considered reportable and separately disclosed if management believes. That means that they still believe that it will be a reportable segment. That means it will still meet up with that criteria of 10%. For those, most especially for the newly business, it will be a reportable segment. And it should be useful to users of financial statement. Information is that information to be reported about reportable segment. One, generally, the information to be reported would be what the management uses internally for evaluating segment performance and for deciding how to allocate resources to operating segments. The following are some information to be reported. One, revenue from external customers separately shown, revenue from transaction with other operating segments within the same entity shown, investment income, finance costs like the depreciation charge, income tax, share of associate or joint venture P&L for the period, total assets and liabilities, profits before tax. Disclosure. You can see, I told you, you don't need to be cramming any form of disclosure requirement. I getting me now? You don't need to be cramming any form of disclosure requirement once you understand what that standard is talking about. Before I accept any question and call it a day, let us just see this one. Next class, we'll just look into the calculation straight up or freshen the memory within 5 minutes. Then we solve the calculation and move to the next topic. How to determine the 10% threshold is now this, which is the formula. We have my revenue test. If you are using revenue test, is that operating segments total revenue divided by total revenue of all the operating segments. How will you get your operating segment total revenue? That means we said my total revenue comprises of my internal revenue and external revenue. The same thing goes for assets, total assets test. Operating segment total assets divided by total asset of the operating segments. Profit or loss test. This one has some kind of analysis. This test is unlike the other two tests above. It requires one to be very, very careful Hence, the following steps need to be observed. Are you getting me there? Are you getting me? The following steps need to be observed. 1. Determine the total profit of all segments that earned or made profit. For you to use profit or loss test, what will you do? You first determine the total profit of all the segments that make profit. 2. Determine the total losses of the segment that incur or made loss. The third one, choose the higher of the two figures above, irrespective of whether it is positive or negative. And the use is to carry out profit or loss test as follows. Once we now do that, what am I going to do? Then I will now follow profit making segment, which is operating segment profit divided by the choice made in 3 above. That means number 3. Why the loss making segment equals to operating segment loss divided by the choice made in 3 above. That means what is the choice you are making? Are you using your loss as the base, or are you using your profit as the base? Whichever the case, you must maintain one rule and policy. So, accountant, the remaining ones is just question before you go for the next class. Oh yeah, question. We only have a few minutes, like 2-3 minutes, and so that you join your advanced tax. Chichi, any question? Michael Faith, Mr. Solomon, Folashade, Anthony, Ibitokpe, Ejiofor, Jinika, Martida. Any question for me?
Sorry, hello, sir. I did not get your name when you are doing the introduction. What's your real name, sir?
I have a question, sir.
Okay, all right. Okay, let me start with Mr. Anthony.
Matilda is.
Though I joined the class late.
Sorry for that.
So basically, things I'm hearing just sound Greek to me somehow. I didn't join IFRS 8. I joined IFRS 5. This one is, what is this operating segment? That is 5, right?
Yes, IFRS 8. Because you joined
8. You see,
yeah. Please go and rewatch. Go and watch the class video. You will understand it better, sir. Because we took the IFRS 5 twice. Watch the video, sir. Mr. Collins, please go ahead.
Yeah, thank you, sir. First, I want to ask you, I didn't get your name when you are doing introduction. I didn't get that. Secondly, is there any notes to this lecture?
Yes, sir.
Yes. Just one we jotted.
Yeah. My name is Mr. Asodiq.
How do we get it, sir?
Mr. Asodiq, that is the name. And the note for today, both IFRS 5 and IFRS 8, I've sent it to the platform.
Okay.
It has been sent to the platform.
When will there be the next class for SBR? When will it be?
Next week, Sunday. For standard. Okay. Yes. Standard. Okay, hold on, please. Standard is on Sundays. Why for Saturdays is for group account.
Oh,
that's the way
what
we
time?
Always have it. On Saturdays,
okay, that's fine.
On Saturdays, we always have our class 10 to 1 on Saturdays for SBR.
Okay.
On Sundays, 12 to 3.
Okay, that's fine. Right. 10 to 1, 12 to 3. Okay, that's fine.
Yes. Okay.
All right. Thank you.
Yeah, but accountants, have it at the back of your mind, towards the end of the diet, the time might be elongated, whereby we will start earlier before 12, so that we cover a lot, because most of these standards, some of them, we have to finish it, like IFRS 16, it has a complex question and very, very wide.
Oh, yeah. It's true, PPE. Yeah.
PPE too is there, so you understand? So, okay, the next person, Mr. Solomon, and somebody else who raise up. Oh yeah, please, just 2 minutes so that you can join the next class. I don't want to waste your time.
Hello, sir.
Yeah. Okay, sir, please can you help us resend the notes to the group for some of us that just joined? The note and the other materials. All right, noted. Thank you, sir. Oh yeah, Ibiyemi, what's the question?
Hello, sir.
Yeah.
I'm so sorry, please. Can we get the recorded classes on the group chat, or how do we get it?
Of course, now.
Okay,
The technical team will send you to the platform.
Okay, sir.
They will send it.
Okay. My network was a bit shaky, so I missed some parts.
Oh, okay. They will send you to the platform after the class.
Okay, thank you so much.
The next
sir.
person, please. You're welcome. The next person. By 3:05, I will stop the class. I will leave the class. The next person, please. Please, others, you can be joining the next class, please. For those who are doing the advanced tasks, please be joining now. Who else have a question for me?
Yes, sir. Please, I have a question. I just want to ask. I was not there when you did introduction. I just want to ask, this new standard, did it affect this new change of syllabus? Did it affect the standard like what we did last
No,
diet?
it doesn't affect any standard, but they just added. What happens with the new syllabus is that they added some things, and one of them is sustainability report. That is IFRS S1. We have IFRS S2. So they added some information. It's not that some things are removed. Are you getting me? Because of the new development globally, and they want to make accountants to know what is happening around the world. So that's why the new introduced standards are inculcated in the new syllabus. That is sustainability report and environmental report. Yeah, sure. That is it. So
Thank you,
everything
sir.
we will see how we are going to cover it for this, so that we will all be given a vital information. So any note that I have at hand, I will let you know before the end of the time, so that it will help you all. Okay, who else?
Sir.
1 minute to go. Who else? Ianu, please, I'm with you. Okay, have a nice day, everyone. Okay, okay, sorry, I have a question. Let me drop my hands. Thank you, sir. Okay. Please, don't join the next class. Have a nice day, everyone. Thank you, sir. Welcome.
Yes. Oh yeah, the strengths. I said no. I left everything. I decided to walk.